Okay, guys. Anna. Okay, guys. This is like my last meeting of the year. Then I wanted to share with you guys this experience and all the stuff I've been going through like for so many days. As all of you guys knows, is that I'm not old in Forex. I just have like 1 year, I think, and 6 months somewhere there. That is the year I have in Forex. Then if you see me like the way I'm doing, is what we call a product of pushing. Like you wanna try to be better like every single day. You are pushing for you to be better. Then another thing that I wanna tell you also, guys, if you don't do like sacrifice, you don't sacrifice yourself on pushing and try to understand what is happening in the market like every single day. Believe me, guys, you're just gonna move from this strategy to another one, like every single day. You keep on moving, keep on moving. The only thing that you need to do is find a strategy that is working for you. Find a strategy that is working for you, and then put effort on it. Backtest that strategy. And I hear so many people keep on saying, I do backtesting, but I don't know what is happening. I'm failing, I'm doing ABC. No, because you're backtesting something that you don't understand. You just go in the market and you start looking, why market sell here, why market buy there. No, you need to have a list of your strategy. Let's say you are saying, I'm going in the market to go and check how is the market respecting the block. How is the marketing respecting the inefficiency? How is the marketing respecting the market structure? So this is the things that you need to focus when you want to try to backtest. When you see the result out of what you are doing, then you know, okay, this is how I'm going to work now. Because I'll check, like there is one thing that I discover on gold. If you check on gold, most of the time when gold want to buy or sell, there'll always be a 3D, it's happening. So market is gonna do 3 touch. Then from the 3 touch, then you see market is gonna sell or market is gonna buy. So it's something that I've been backtesting, then I understand how it's working in the market. So this is how you have to do. So if you don't understand that, believe me, you're just gonna have a big issue in the market. So for today, I wanna answer, because I saw questions that people ask. Let me go back again to the question. The first things what people ask is, how do you know that this trade is gonna be a swing trade, and how do you hold your trade for so long? So first things before I answer you guys on that question, the things that I wanna try to do, right now, people, they keep on joining, guys. So let's see. Okay, the things that I wanna try to do is, you need to identify first your market structure. Then for the market structure, let me go this side so that I can show you guys what I'm talking about. And I need you guys to pay more attention to this one. So if you pay more attention, this is when you're gonna get what I'm trying to explain right now. So let's say we have a bullish trend. Markets push to the upside, come down, push again to the upside, come down, then push again to the upside, then markets come down. Let me just make it from here. We know already this is a bearish trend. Market is pushing to the upside. Then on our focus, when we see market, let's say it was coming from this side like this, then get here, we had the break of structure, market return, test the area here, then market start going to the upside. So when we start, market start pushing to the upside like this, this is our II. We have an II from that zone. Then when market breaks structure from this zone, we have the break of structure on this area. So now what you need to do is we are trying to see what is going to happen because market already break the II. So when you see market print a new II somewhere here, market print a new II, either it's gonna be just a I, like a recent I, or market is going to mitigate any decision points that we're gonna identify somewhere on this zone, then market start retracing. So when market is retracing on this zone here, what we have to see on that zone before we take a trade, so we need to see something like this. It depends on how you know how to approach the market. Like most of the time, myself, let's say I identify a zone, this is my zone. Then market gets on that area, touch the zone, then drop straight. I'm gonna take my first entry on this zone here, but this is a risk entry. This is how you can snipe, but it's a very, very, very risk entry. So my advice to you guys, before you take a trade there, you need to be on the safe side. How do you call the safe side? The safe side is for you to see market gets in your decision point, this is your decision point. Then market get on that area, touch the zone, because here we're gonna have something like this. Market touch the decision point, this is our DP, decision point. Market come down. When market break this low, then you wait for market to pull back on this side where there'll be a decision point, another decision point where market printed, then you continue down with that decision point that we identify on the zone. So if you don't see something like this, let's say market didn't break structure, then market start returning from this area. Then what is gonna happen? We need to see if market is going to break this area. If market break the area here, then what is gonna happen is we look for any decision point that market left here before they break structure, then markets return, then we continue to the upside. So this is what you need to check in the market. This is what I was doing on this area. So you can check, market is giving us the higher high, and higher low. Then before we take a trade for a change of structure, we need to see this movement, the one that is happening here. We need to see something like this. Markets come down, break structure, return to this area, then market start dropping. Already we know our daily structure, this is daily. So our daily structure is on an uptrend. Before we consider that market is already breaking structure, we need to see how market is going to break this low. If market failed to take out this low, then we're still going in the uptrend. And when we want to buy, let's say we want to buy from this zone here. Oh, people keep on coming. Okay, I'm gonna answer that question, don't worry. Let me just do people that they're waiting. Okay. So what we need to do in terms of market structure, let's say this is our daily. We know daily is going up. Then market gets on a certain area, print a higher high, then market start pushing to the downside. So this movement, the one that is happening here, we're gonna consider it as H4. This is H4. H4 structure. Then on H4, when we see a break of structure on H4, that doesn't mean we have a break of structure on a daily. Remember, this is our daily lower point. Here, this is our low. Then when market is coming to the downside, our main focus is to see any decision points that's a station the left on this area. If markets come here, fail to break this low, then start pushing to the upside again. when we are buying, let's say from this area, when we are buying, sometimes you're gonna see on the low time frame on this area, because this is H4, let's say you go to H1, you're gonna see maybe market get here, maybe give you an accumulation, return, test, then continue to the upside again. So this is what you're gonna see here. Or what you're gonna see, most of the time, people, they wait for market to come, take out this lower high, then market return, test the level, any decision point that was here, then market continue again to the upside. So this is how you need to trade. Then how do you identify that this is a long trade that you need to hold? I think it was Eri or someone asked this question. We know already where we have our high points. This is our high. Markets retrace. When markets retrace, then let's say we found the buy position on this area here. Then where are we holding our trades? We are holding our trades until we see what is going to happen on this zone. If market is gonna break this area or market is going to hold from a block. I'm gonna show you guys the typical example in the chart. If market is going to hold on this block. Then when we see a reaction from this, market fail to hold, then market break this zone here. Then where is our main target? Our main target is to see when market is gonna return from this area. Let's say market return here. This is where we have a buy position. We have a buy. For me, my first buy is going to be here. My second buy is going to be here. Then we have a buy on this zone. So when we are buying from this area, you see sometimes I wrote on my chart, STP, surface take profit. So this is my first level where I need to go. Okay. So this is my first level where I need to go. Oh my God. So this is my first level where I need to take my profit. So I can take my partial profit from this area. Then my next target is gonna be the higher high. Since we already break the last lower high, my main target is gonna be the one that is on top. So I'll wait and I'll hold my trade to see how is market going to react from this area. I hope guys are making sense. So when markets break the last lower high, then what you need to do is to focus to wait for market to retrace, meets any decision point that we're gonna have, then we start buying to push again with it to the upside. So this is what I'll do. My first TP, let's say if I have two trades, this one here, maybe I can take my partial profit on here. This one also, I'm gonna take my partial profit here, just compound my account. Then I'm gonna hold my trade to see the reaction, how market is going to do what is going to happen and what is going to happen on where market is going to the upside. And check what happened again. When markets break structure on this area, then we need to see, this is our last higher low. We need to see before we consider that there is a change of trend in H4 is when markets come down, give us a BOS here, then pull back again, mitigate a level that is there, then we continue with it again to the downside. So this is what I want to see. So if I don't see this, there is no change of structure for me. And there is another thing that we call a complex pullback. So a complex pullback, let's say we have market that come down, push to the upside, come down, push to the upside, market come here, fell to break this low, then markets return again, market at the end of the day, mitigate the level, then come and take out this low. So many people also, what they're gonna have, I have a typical example here. Let me show you guys. Show the example. This is the example. So we know we have market that is going in a downtrend. We know market gets on this area. Let's say market get on this area, then we see something like this in the low time frame. Then we start going to the upside. Let me just draw it properly. So market get on this area. On this area, what we need to see, we need to see either market give us an accumulation. Buy, come down, test, come down, test. Then we have a spring, we have a test, then market continue to the upside. So this is the first things we need to see on this low before we take a buy position. Or what we're gonna do, we need to see how market is gonna do something like this. Market is gonna buy, come down, push to the upside, break this low point, come down again, then push to the upside. So now this doesn't mean we have a change of structure. This is just a pullback, the one that we call a complex pullback. As long as this complex pullback haven't break my last lower high, I still on the bearish side. I still on the bearish side. So if market gets on this area, let's say market do something like this, then return, then continue. Now from there, how we know? Now from there, how we know there is a change of structure? Because my last lower high was being broken. Then I continue with it to the upside. I wait for a pullback, then I continue to the upside. So since I don't have this, you're gonna see something like this. This is H4. H4 is going to the upside. But inside H4, we're gonna see on H1, we're gonna have also something like this. This is H1. This doesn't mean we have a break of structure of daily. This doesn't change anything about daily. So our daily structure still bearish. But H4 is trying to opposite the daily structure. We have a daily structure, bearish. We have H4, bullish. And this is where people, they get so confused, because when people, they see something like this, they forgot about daily, or they forgot when they see again something like this, they forgot this is H1 structure that is going to the downside. Then they forgot about H4 structure, that we have H4 that is going to the upside, that H4 is trying to opposite the daily structure. Then when H4 gets on the decision point, where we have our significant base, inside the significant base, we are going to have a DP. When we have that DP, then you're gonna see from the DP, then market is gonna do what? Market is gonna start selling. So when market is selling, what do we do from this area? Because we see market is selling, then we need to wait and see how market is going to react on this zone also. Guys, sorry, let me just put people there joining. So we need to see how market is going to react from the last higher low. Then you see market is gonna do something like this, it's gonna pull back again, then market is gonna continue. Already we know what is happening with our structure. Then let's say we are selling from here. This is where we are selling. What is our target? The target is here. This is where we have the last lower low. This is what we call a swing trade. Because when you are selling here, you know already the exit is here. That is where we need to exit. And we're gonna see how market is going to react when it gets to the last block, the one that the institution they left here. If markets break this level, then we know already, okay, we're still on our bearish, then we're gonna continue to downside, then market is gonna continue with the same movement. So now what we're gonna see, when people, they get on this area here, they know already, okay, this is my last lower high, then they start buying, thinking market is just gonna continue again. But market having to break this area. Why do you continue buying when market haven't break this area? So we need to see how market is going to break this area. My buy that is gonna be a continuation buy is if market do like this, return. We have a decision point here, then we continue again to the upside. There is a question someone asked me in the chat saying, which time frame do we consider? Most of the time, like my side, I check daily. I go to H4. Sometimes I use H8. You can see I use H8, H6, but if I find the structure on daily already, for me, it's fine. I can go to H1. I can use M15 for my entry, M5, M1, or M2 just for a refined entry. Then I'm gonna hold my trade with the big time frame. Any question, guys, before I move to the chart?
No question at all.
I hope you guys understand the way structure is working and how you can take a long trade without having.
Yes, we can.
Okay. So now let us move to the chart. Let's move to the chart. You guys, you can mute yourself. Okay. So let us move to the chart.
Hello,
And
sorry, I have a question.
okay, what is the chart? Yeah, this is the chart. So let me do something like this. Okay, sharp, guys. Let me do something like this. Anyway, it's fine, no problem. So, okay, let me go to maybe this one.
Can I ask a question?
Okay, ask question, my brother.
If let's take an instance, the daily is bullish, the 4 hour is bearish, then the 1 hour is bullish. How do I treat such market structure?
You are saying?
If the daily is bullish, the 4 hour is bearish, then the H1 is bullish. How do I trade that kind of market structure?
Okay, so what you are saying is this. Daily is bullish, right? H4
yes,
bullish.
Bearish. No, H4 is bearish.
H4 is bearish, huh?
Yeah, then what? The H1 is bullish.
H4 bearish, then H1 bullish, huh?
Yes, H1 bullish.
Okay.
Correct.
Very easy, bro. This is what I was telling you guys. This is what I was telling you guys. I'm just telling you guys right now. This one on top here, the line that we have, the black line, this is our daily. Daily is bullish. Our daily is bullish. This one here is the H4. This one, let me just change the color. It's okay. This one. We say this one is H4. What is this thing for writing? This one is H4. So if we can check the way market is going to the upside, here what we're gonna say is, H4, the one that is going to the upside like this, H4 is aligned with our daily structure because our daily structure is bullish and H4 here is aligned. Then we get on this zone here. You see this zone here, the one that is going down here. H4 become bearish, meaning that H4 is trying to opposite the daily structure. So here what you're gonna do is you are selling. How do you sell? Is when you see market get on this area. So let me just draw it like this. This is daily, sorry. So this is how H4 look like. After printing a new high, then H4 return down, H4 mitigates, H4 goes down. Then inside this H4, let's say inside this H4, we're gonna have again on this leg, the one that is going, this is H4 leg, then we're gonna have a H1 that is pushing to the upside. So when H1 is pushing to the upside, something we need to put, this is what you call H1 is what? is bullish also. H1 is aligned with the daily structure. So this one, you are trading a continuation. Then this is the leg of H4. Then we have H1 that is coming down. H1 is pushing to the upside again. Then what you need to see is what happened on this area. Is there any block, any decision points inside H1 structure that is gonna push again this H1 to where? To the downside. This is what you need to put. But as long as H1 from this area is pushing to the upside, H1 is bullish and H1 is trading with what? With our daily structure. I don't know if I'm making sense, bro.
Yeah, I feel you, bro.
Yeah, so the only issue right now is you need to see now on the H4 structure. What is happening on H4? Did H4 break its own structure on H4 so that it can continue with daily? Do you see? So this is H4, like the one I was explaining. H4 is going to the downside. Then H4 start buying. Let's say H4 is buying. This is where we have the H1. H1 is going to do something like this, break structure, return test, then we continue. So we're going to say H1 is what? Is aligned with our daily structure. Then when H1 is going to get on H4, you see, this is the H4 II. So if it get there, then we're going to see our H4, how it's going to react to the point where we have the II. So if we get on the II, then H4 break that structure, then push to the upside. So what we have to do is to wait. Let's say we go to the low time frame, then H4, H1 here, you're gonna see again H1 is gonna buy, break this level, grab all liquidity, come down, break this area again, then continue just like that until we get on this area. So H1 break of structure doesn't mean it's the same as H4 break of structure. So each time frame got its own structure. The only concept that you need to keep on mind is try to understand what is happening. What is happening in the market so that you don't get confused. So you need to identify. You do like a list like this. You know, okay, my daily is bullish. My H4 is bearish. So since my H4 is bearish, so H4 is trying to opposite the daily structure. Okay, let me go and look for H1. What is H1 telling me? Let me go to M30. What is M30 telling me? So you identify all those, then they are going to help you to understand what is happening next and where you are going. So trades each time frame on each one. We have H1 is bullish with each own structure. Let's say we have something like this. This is H1. Then H1 is going to where? Then we have something like this. This is, let's say, this is our, I don't even know if I wrote it properly. Just do something like this. So it doesn't give me stress. This is our H4. This is our H4. This is our H4. Then this is H1. So this is what you're gonna see on H1. You understand that when H4 is pushing to the upside, H1 also is pushing to the upside. Then we get to a time where H1 start becoming bearish because of the way what is happening on the big time frame. So market is gonna do something like this until to get again to the H4 decision point, then it's continue going to the upside. So this one here coming to the down was opposite the H4, then this one is going aligned with H4. But at the same time inside, you're gonna have something like this where market is gonna sell, is gonna buy, is gonna sell. Then my advice to you guys, when you are trading structure, let's say you are trading a bullish trend, me most of the time, I always focus when market return here. That is what I always focus. This is where I'll look for my buy position. I'll look for my buy position because the sell is more dangerous than buying when we are on the uptrend. So I hope, guys, it's making sense. This thing just needs you to practice and to understand what is happening in the market before you get them, before they click in. So without that, then it's just a story of you saying, I have 20 years or 10 years in the Forex, but you don't understand what is happening. Don't worry, my brother, you're gonna get whatever you feel and want. Oh, what is happening? Okay, so before I jump into other stuff, let me just show the typical example. Why this thing stop moving? Okay, so let me show you guys a typical example on this one here of what is happening. Where is it? Where is it? Where is it? It's this side. Okay, guys, let me delete all this crap. They're here, so we can do the new one. Okay, guys, if you can check something that we have right now. Yeah, so if we can check the chart we have right now. When I start trading on my daily time, when I was using indicators, for me, when I see something like this, from what I learned from people was, this is a manipulation. So the normal market for me was when market is doing boom, going down, that was for me like a proper market that I have to trade. This one here, I'll avoid it by all means. I'm never gonna trade from this one. And for most of the people that they're asking about, what is the point of interest that I need to consider more? You need to consider the point of interest that leads you to a break of structure, or you need to look for the SDE. When you have your SDE, then what you're gonna understand is when markets return back, you need to look on top of the SDE, what is the decision point? And which decision point? Guys, sorry, 1 minute. So you need to understand which decision points that was the one lead you to a break of structure. And one thing also you need to keep on mind. Let's say we have a level that is here. Market come here down, touch the level, then market push to the upside. Then market come down. So again, from this area here, you're gonna have maybe something like this. You're gonna have maybe something like this. So most of the people where they're having like some mistake what they're doing, for them, this one, they don't consider it as a break of structure. They'll tell you this is a binary structure or this one is a measure, whatever they're talking, I don't know. So one thing you need to pay more attention is you need to understand which one between the two leads to this here, to push and give us the new higher high. So what we're gonna do, what you're gonna see, this one here is the one help us to have this higher high. This one here is the one that help us to have this higher high. Then when markets come down, break this level, already we have a break of structure. So simple and straight. Then what we're gonna do is to wait for market to push to the upside, where we find our decision point, significant base, we mitigate, then we go free to the downside. This is how you trade structure. Trade structure, don't trade the trend, because trend is gonna confuse you. Now, check what happened here. If you see properly from this area, This low point here was the one that helped us. Wait. Was the one that helped us to have this higher high. Then market come down, break the level. Let me zoom a bit big so that we can see. This level here was the one that helped us to have this higher high. This level here was the one that helped us to have this higher high, then they pull to the downside. So when market is coming to the down, what we have to do is to look how market is going to react from this area. Then check what happened when markets come down, break the level, this area here, then start pushing to the upside. So now people, they ask me, how is the market selling from this area? Yes, market sell from this area. If you are using, let's say, you are the ICT guy, you say we have inefficiency that is on this area. Then from the inefficiency, if you wanted it to fill the inefficiency, then you're gonna miss your trades. If you are trading ICT stuff, you're gonna miss your trade because the logic of ICT, market has to fill the gap before it continues to the downside. So what we're gonna do, like me, if I'm trading, I know I don't ignore that there is inefficiency there. And the way me I'm trading, I'm gonna even make money from this inefficiency. Why? Because I trade from the open of the inefficiency, then to 50%. Here also, I supposed to be also the trade. But what I'm gonna do, I'm gonna use the hidden base. How do I call this one hidden base? This is why you see sometimes in my chart, I always write HB. The HB is the hidden base. The hidden base is the space between these two candlesticks. Check the way the body close each other. It's the one that we call in supply and demand, the hidden base. Then if you shift to the low time frame, you find on this zone here, there must be a block or there must be inefficiency that is there. Then check the reaction to show that this level was a very significant level of supplier. Check the reaction, market drop. Then when market is dropping, my target, my first target is on this area. That is where there is my first target. And remember to consider more the body than the wick as the break of structure. So I'll consider more this body that market break the area, come to the downside. You see, we break this zone already, come to the downside. Then when I see market break the level, I'm gonna check to my left side. What is there on the left side that is going to mitigate so that the market can return to come and confirm this area? Because we have a break of structure. If we can consider even this low point here, we're gonna say we have the SDE. We have the SDE that is there. Because this level here was a strong level of demand. Check this candlestick that mitigate this one. Then market return, test for the first time, come again. Second time, market push. If you don't consider the break of structure, you can consider even the SDE, the one that is there. Now check from the SDE, market come again, come close to the SDE, push to the outside, mitigate the HB, then we come down. When we come down, what do we do when market is going to the upside? People that, again, they are trading inefficiency, they'll tell you they're gonna consider this zone here, that is their inefficiency. They're gonna consider this big zone. Inefficiency is there, they wait for it to fill, market fill up, they hit even a stop loss, then the next minute, market go in that direction. So when you're trading inefficiency, and if you see there is the hidden base on top, please pay attention to it. Either market is gonna go to the hidden base to go and mitigate the hidden base, then drop again. So as you can check, this one, they use again the hidden base, the one that was here. If we go to low time frame again, more on the low time frame, let's say we go there on M10. On M10, you're gonna see the zone, the one that is there, then market continue again to the downside. And even if you want to refine your entry, you can go there, you check the inefficiency. the inefficiency is still big. That this one, if you're using like a tight stop loss, it's supposed to hit your stop loss, then continue again in your direction. So these things happen like every single day in the market. Guys, I'm sorry. Just 1 minute. I opened a trade and I forgot to check that trade. So it's showing me flame.
Sorry.
Okay. Yeah, so then what is happening on this area again is after market mitigate the area, then where is our target again? This is like, okay, for people that they want to scalp the market, like they want to catch every movement. This is what I'm showing you guys, every movement. Then as for me, I'm going to take my trades here, hold my trades, then continue with my trades until I know where is the big picture of this market. So if we can check the way market was going to the downside, market was just keep on respecting all the decision points. Then how is the market respecting the decision points? This is also another question that you need to ask yourself. So market was respecting the decision point that was leading to a break of structure. But there is something that always happens in the market that gives so many people like stress is this. We know this area here. This area here is, let's say we mark this area from the low point. Let's say we are trading M15 or, sorry, M10 or M5. You see your break of structure is the one that happened from this area. Then we have this block. This is our decision point that lead to a break of structure. Now check what happened when market is going to the upside. But one thing you need to keep in mind is market is already show us a sign of saying it is in a bearish trend. So as long as market haven't break this area here as my last lower high, I'm still bearish. Anything can happen. But if it's not taking, if it's not taking out this level here on top, I'm still bearish. Then check what happened on this zone. Market push gets on our block that leads to our break of structure. Then market did what? Touch the level, then sell. Market touch the level, sell. You see, market starts like consolidating on this area. Then market give us something like this. Do you see what is there? This is how people they've been asking about liquidity, and you guys have your answers here. The liquidity zone, like the one that people they call engineering liquidity, is something like this. Market tests this zone for the first time. Market tests the zone for the second time. Then market drop. Drop at the same time, they're creating another liquidity on top. Sorry, down here. They have another liquidity that they build. Where they're building liquidity, you're gonna see is inside this last candlestick. Then when market is pushing to the upside, there is something that me I always consider is this one. Do you see this level here? This level here. So I always consider this one as one of my entry requirements. Then let's say we check, we go to low, we go again to M5, M15. You see we have the same zone, the one that is there. This is what we call MPL. Someone asked me about this question, the MPL. This is what I call the MPL. So this week, it's been engulfed by this week, the one that is there, before all this movement happened. So this level here is a very significant level. And why I could use this level as my entry? Because if you check this last candlestick, we start from here. This last candlestick with this void movement to the downside, with this imbalance to the downside, was being mitigated by this candlestick. When this candlestick opened, go and mitigate this one, then drop. So when this one happened, it was mitigated by this candlestick. You see, this candlestick. Already on this zone here, we have almost two types of decision points. that me, I always use. Let me do something like this. Do you see, we have almost 2 decision points that I normally use. So if I find something like this, I have my HB is here, my hidden base, then I have my MPL that is there. I'm gonna take my first entry. It's gonna be on this level here. That is my first entry. My second entry is gonna be either on the open or 50%. Most of the time I use the open. I'm gonna take from the open. I'm gonna take from the open there, and my stop loss is gonna be where? My stop loss is gonna be on top of this zone. Let's say maybe 5 pips or 10 pips. It doesn't matter for me. As long as I'm gonna make money out of it, I'm okay. My first entry is when market gets on this HB. My second entry is the one that is on top on the MPL. Then I'm gonna come with the market until to my low point. Where is my low point? My low point is here. This is where I have my last lower low that lead me to this area. And for this lower high to be valid, I wanna see how market is going to break structure. Now check what happened. Market break structure on this level. We have a break of structure. We have a break of structure here. Then this block happened out of my structure. So for me, this block is a trap. If you want to consider it in your trade, is you, but me, this block is a trap. Why is a trap? Because this block didn't happen inside before the break structure. Now check this zone here. How this zone is very, very, very important for us. We have inefficiency that is there. But check something. Do you see this? This candlestick here, go and fill this inefficiency, the one that was here. Do you see? So already this inefficiency for me is not fresh. It's something that if markets return here, I'm gonna trade it maybe with a 50% chance of it selling again, because already market is already test this level. And you need to pay attention to this stuff. They give us problem. When I didn't know them, because I know there is inefficiency here, for me, market has to come and sell from this level. Then you're gonna see market is gonna use the block that is gonna be on top of the inefficiency. So if we wanna try to refine our entry from that area, where was I again? Okay, so we're gonna try to refine our entry. We can go maybe to low time frame like the way I'm using it. But as long as I have this one, for people that they know the IPA, price imbalance, the one that is there, I'm gonna even put like this. So you see that week, I'm gonna put it like this. But if we go to low time frame, let me just check if market wants to just shift. Do you see, if we continue going to the low time frame, more low time frame, then we're gonna find the exactly block that they use from here before they come down. Then if we can check again here, when I was saying market fill the imbalance that was there, the inefficiency, this is what I was saying. If we can check something like this, you see, market return there because that was the exactly inefficiency that push market to break this structure. They return there, then they continue to the downside. Here they return to a big block because this was the structure on M5. Then they return to fill the level that pushed to the market break of structure. If we can check again on M5, we had the small break of structure, market return takes and continue the downside until we get the big structure where market break the M15 structure, then they push again to the upside. So when they push the upside, it's just to come and mitigate this decision point, the one that we have on this area, then we go to the downside. So these things like happen like every single day. To find a better decision point is like a point of interest. This is my point of interest because this one was being mitigated by this week. And here, I'm gonna wait for market to come and react to this level, then I'll take my sell position. Let's say if we go to more to low time frame from that area. Go maybe to M2. do something. So do you see what is happening? I'm sure maybe on M1, we're gonna find something there because on the reef, we don't have second. So if you can take, so simple guys. We have the SDE, the one that is there. Markets break the area, return with this candlestick. You could take your entry from there, then go to the downside. If you are trading like me, you jump straight on the trend from this level, then you go to the downside with it. Do you guys understand the way I explain? Are you guys still alive?
Yes, sir, we understand.
Okay, so this is how I trade. I trade anything that you know the same way. It can be NAS, V75, whatever. I trade them the same way. Now let me go to currency. Maybe currency is gonna be something. Hey, but one thing before I go to currency. Guys, meet yourself so that I explain to you. Meet yourself, please. Don't worry, I won't forget about it. I have a nice example for you. So, before you take a trade, one thing you need to keep, guys, can you meet yourself, please? So before you take a trade, we have something that we normally call PA. So the PA, no, boom and crash, they act very simple, guys. I'm gonna even show you on boom and crash, you see, very simple. So, okay, one thing that you need to pay more attention to the market. Before you take a buy or sell position, you need to have the characteristic of how price is approaching to your level. So, sorry guys. Don't worry, I'll show you. So first things that you need to look at is, let's say, market give you your block. This is the block. This is the block. We have our line, the one that is there, that is giving us this zone here. We're gonna call it as our DP, our decision point. But how do I take my trade from this area? I don't take a trade blindly. I don't just jump in a trade because I see the trend is going. I don't do that. What I normally do, let's say you see market is going to the upside, straight like this. Believe me, you're gonna get trapped. Because what is gonna happen, market is gonna get there, it's gonna give you what you want, something like this. Then next minute, market shoot to the upside. So the first thing that I normally check in the market is something like this. I wanna see market give me this. This is what I wanna see. I wanna see something like that. I wanna see market touch here for the first time. Market touch for the second time. Market touch for the third time before my decision point. And this decision point, let's say this decision point already give me something like this. People that they're asking me about HLZ, this is the one I'm explaining right now. So I wanna see something like this. I wanna see markets give me a break of structure, or there is an SDE inside here then this is when I'll look for me to take a trade when market gets on this zone here. You see? So this is what I want to see before I take a trade. And another thing that I'm going to do is to see how market is going to react at this zone here. If market break also the last point, the last swing, then market is going to return again. Sometimes market return again here, then market drop. Crazy. This is what I want to see before I take a trade. I want to see market give me 3 touch, the one we call 3D. And guys, pay more attention to this. Because don't just take a trade because you need to take a trade, because you see market is at the decision point. I want to see something like this. Market give me 3 touch. The last one is where I'm going to take my what? My sell position here on this zone here. I'm going to take my sell position. Then the second entry can even be somewhere here. Then I continue with the market to the downside until it respects my 90% rules of coming from where market start buying. This is the first type of what I look in the market before I take any, let's say, sell position or buy. It's going to be the same, but I'm going to explain to you only on the bearish side, but this topic is still the same. Even on bullish side, you want to see the same thing happen for you to take your buy position. Then the second thing that I want to see is for market to give me something like this. This one here is the one that we call a momentum line. I'm gonna put my trend line here. It's not like the way people they trade with the trend line. I'm gonna put my trend line from this area down here. Then I'll see how market was reacting to this trend line. This one in supply and demand, we call it CP, compression, or people they call it momentum line. Momentum line. Why is the momentum line? Because market was coming, hit this level and bounce, hit this level and bounce. Now, people, what they will tell you, they'll tell you they are following the trend. This is an uptrend. Market is pushing to the upside. But they forgot that this market, it has a structure. It has a structure. This is our downtrend. Market respecting structure. Follow structure, don't follow the trend. Because this is also, it's an uptrend. Then you follow the uptrend, you get there, market drop, you have to start asking yourself so many questions. This is how I start with you guys on the market structure. Because I was trying to show you what is happening first before I come and show you these things. So you need to understand that you need to take the entry align with market structure. Something is going like this. We break a structure. We have SDE. Market is going to the upside. We have our compression. How do you do? How do you take the trades? When you see something like this, my entry is going to be, my first entry is going to be here. I won't even ask any question to wait for any confirmation. I'm just going to take my entry straight on the spot. I'm going to take the entry straight on the spot from that area. Then I'm going to wait also for market to come and break this level here. Because this is the last point that gives me this point here. Market has to break this zone here to show me that it's going to continue going to the downside. Then I'll wait for market to return on this zone here. When market return on this zone, then I'll take another sell position. Okay. Then I'll take another sell position from this area. Then I'll go with it to the downside. So simple and straight without stress. Then when I'm taking my sell position, where is my target? My first target is on this zone. Where down? Why this down? Because this is where all this compression started. I need to respect the 90% rules that market always return the level where it started. This is where market started. So I'm selling from here. Let's say this is daily. I see something like this on daily because daily was trying to opposite weekly structure. When I'm selling from here, imagine selling from here and hold your trade up until this. How much are you gonna make? So this is the first topic, second topic of what I'll do before I take a trade position. Then let me go to the last one that I always look, and that last one is the best one of the best. So market is gonna do like this, something like this, come down, push, come down. Then they get somewhere here, they push again, somewhere there. Now they start playing a stupid game, something like this. Now they're playing. Play, come down, mitigate the area, then come down again, test the zone from that area, then boom, we shoot down. Okay, so this zone here, this is how you see me sometimes. I wrote something like this. R1, there is no magic. It's the same topic that you guys know. But sometimes you just ignore them. You don't, I'm gonna put there my R2. I'm gonna put there my R3. Then what people, they always do, so let me just write for you guys. So this is, sorry. This is R1, R2. This is R3. This is when it comes to supplier and demand. What I learned from my mentor, Mansouri. So you follow this thing. You understand this is the level of liquidity. This is what we call liquidity. So because people that they are buying from this level, people that they are selling from this level, most of them, their stop loss is somewhere here. They put their stop loss, some of them, they put 20 pips, other they put maybe 20, 10, you know, those kind of stuff. They have their stop loss on top there. People that they sell here, stop loss is there. The one that they sell here, stop loss is there. They sell here, stop loss is there. Now, the cool things with this one is gonna be something like this. Either here we're gonna have maybe, let's say, we have a small block that push this market to the upside. When they push to the upside, because they see they have their decision point there, they push here to go out and mitigate the area, start selling from there. Then you're gonna see again, when they are selling, they'll have a block that is gonna happen here. Either a block or inefficiency that is going to happen. Then from this block, the one that they're gonna print on this level, they'll make sure to return back to this zone. After they fail, because remember here we have a block that push this market to break this higher point, to grab all the liquidity. So when you see market come down straight and fail to hold from this level so they can continue to the upside, then your attention is gonna be to see how market is going to break this level. Then market break this level here. Then market push again to the upside. Then when they push to the upside, it's just for them to come and mitigate any decision points that's supposed to happen on this zone here, where we have our SGB. Then when they mitigate this decision point, then you're gonna see market is gonna drop like nobody business. You see? And for some people, they call it maybe eco eyes. They have their eco eyes here, but as in supply and demand, we know as many times as market is touching this area, we continue on writing, okay, resistance 1, resistance 2. If it was, let's say, down here, we're supposed to write S1, S2, S3. Then you're gonna see market did what? Push to the upside. When market push to the upside, then market is gonna come down again, break this area, grab liquidity. These things happened yesterday with NASDAQ. If you want, I'm gonna show you right now. It happened yesterday with NASDAQ. They grab liquidity on top, grab liquidity down, they push inside here. I mean, let's say they fund 50% of all this movement, then they come with it down. Without taking that, let me go to NASDAQ. Then this is the area. Let me go to H4. And the good things with this one was because when I was taking, when it was happening, I took a video, I record the video to show you guys what was happening here. Then the only thing that you guys need to do, I keep on repeating the same thing, is by practicing. If you don't practice, guys, you need to practice already what you know. Let's say you try to identify, I have my eco eyes, then market grab liquidity. So what is going to happen? Something you wrote down. You have a paper where you wrote all your stuff, all your strategy, so that you can see what is happening, and you go and try to backtest them. Guys, I'm showing something that when you apply them today, believe me, it's gonna help you and it's gonna change more stuff on what you are doing. Market gets on this area, that was yesterday, get on this area, touch this level, create resistance 1 and resistance 2. Then market starts playing down on that resistance. This is what I'm just explaining to you guys right now. Then market did what? Push to the upside, markets come down. At the same time, they create another equal low. But check what happened. When they pushed to the upside, they created this block. And I told you guys, check the way they created this block. They push more to the upside, break all this level where we have the equal highs. Now they start coming down. When they're coming down, what is the target? Is to see how they're going to react from this block. This market is so good. It's going to give you what you want. They test this block. You see, they test this block after they break this area. Come down, test it for the first time. This is something you need to keep in mind. This was the first time back. They test this block. They push to the upside. They grab all liquidity on top. Now, where is their target? I explained this thing yesterday before even they happened. I said to you guys, check, they grab liquidity on top, there's another liquidity down. Now they push more to the downside. They did what? They grab again liquidity. Guess what happened? They return again back to the upside. Check what happened when they return to the upside. Before they come down, they print a decision point. You see, we have the MPL. This is the MPL. They have MPL this week was being engulfed by the other week that is there. Market gets on this area, test the zone, drop, go again, test the same zone, drop. Now check what happened. They push again more to the upside because they have interest on this area. They have interest on this area. Check, they test the zone there, then they drop to the downside. But if you check properly, what is happening? What is happening? We have a small structure. What is happening? We break this low point. Let's ignore the equal lows. We break the low points because this low here was the one that helped us to have the eye here. Then they return back, mitigate the level, they block that break this structure here. They push to the upside. They come and break structure, return again to confirm the zone. If we consider the SDE, we're gonna say this is the demand level. Market test demand, break demand. We have an SDE. Let me write for you guys. We have an SDE that is there. The SDE is there. They break the SDE at the same time with structure. They return to SGB, a significant base, the one that was here. Then they come down. Now check when they come down, where is the fastest take profit? Is this one here, the STP. They return again up. Let me go to M3. Because I wrote there what was happening there. This is M3, Iden base, test the Iden base, then they come down. Now when market is start going to the upside, where is our main focus? We know this is the last lower high. Then where is our target? We need to see if we want to change the trend is how market is going to react from this area. Okay, market break this level, push to the upside. This is what I was telling you guys. Okay, I'm scalping NASDAQ, I think it was last night, because I saw we have another HB, the one that is there. Let me go back. We have another HB, the one that is, I think it was on the M1. cut all this stuff. Here. And the good things was that I shared this analysis yesterday. So the first things that I saw was this one here. I think it was on M2 or somewhere there. Let me check M2. I even forgot what I saw there. Okay. Yeah, it's there. It was M2. So the first things that I saw was I saw the MPL. You see, this week was being engulfed by this week. But down here, we had what we call the hidden base. You can see I even put my alarm there. So when market gets on that area, I'm supposed to take my first entry. So when I see market was going there, then this is where I put my pending order. So below that zone. Why I put below that zone? Because if you check properly, I don't know if you guys are seeing properly, is we have this week was being engulfed by this week. So I took the first entry that was there, market drop, check, return to this area, then start buying again, push again, because we have this block here, one that is there. We had an SDE that was here at the demand level, market return, we have the decision point, market mitigate the decision point, then market come down. This is the block. Then what we have to do is to see how market is going to react. Then market went again to my second entry, almost close there. You see, close there, then start coming down. Let me play for you guys so you can see what happened. And this was my last scalp entry. Then I sleep after this scalp entry. So you can check, because I saw market break structure. I know market is wanna push to the upside. I was just taking advantage of what was happening. So already from here, if we calculate here, what was how many point I made? Was almost 20 pips, free 20 pips. Again, from here was 30 something, then market continue and go to the upside. So simple and straightforward. Nothing complicates. Just I respect what I know. Market break structure. What do you expect next is market to buy, to return to a decision point, then push to the upside. This is what happened. They push to the upside, they break this area, they come again to the downside, continue to the upside. You see? So simple and straight. So now people, they're trying to complicate things by themselves. If we go again, this one here, I'm not sure if I've already deleted all the stuff that was happening here. What was it again? I don't even remember where was it again. Church was H4. Okay, it was here. What's the last candlestick that institution they use? Yeah, I'm sure probably it was here. Okay, guys, let me check something. GBP. Chief. There we go. Do you guys see what is happening on this stuff here? GBP Chief. So you can check here. We are the last up candlestick before all this down move is the one that we call a supplier. Is the one that we call a supplier level. So from this supplier level, markets come down. we have this level here as the last swing that push to give us the higher high. When markets come to the downside. So when market to the downside, one thing you need to understand is check how long it takes market to get to this zone here. Almost 24 days, I'm sure, yeah, 24 days for market to come to this zone here, to make this stop and start pushing to the upside. After we break this structure, check what happened, market return, then market use the ident base, the one that was here. Here also we can say we have the SR flip. So the SR flip is where we can call this one was a resistance from this demand level, where we're gonna say we have the SDE. Nice, 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 bro. So you're gonna see markets come to the downside from this block, the one that is here, is the demand level. Because if you know supply and demand, what you know is market rally, create a base, market rally, return, then rally again. Then from this demand zone, people will say this is SDE. We break the SDE, we have our SGB. Then from the SGB, we have the ident base inside the SGB, market test the zone, then come to the downside again. So markets come to the downside again. So when market is coming to the downside, what do we expect? Is market, when it breaks the SDE, to return, test the zone, and come to the down. Here, market break again. The last point that give us this lower high, the one that market failed to go and check out, we're gonna call this one again the FTR because it failed to return. Now markets come to the downside. When markets come to the downside, check what happened. Market now starts compressing. Do you see, guys? Market is compressing. Here we have all the entry type to show that this trade was a nice trade. We have the compression, market is compressing, but at the same time, we get on top of that, we have this eco highs, the one that was happening here, the eco high. We have resistance 1, resistance 2, resistance 3, markets break this resistance, push to the upside. Already for me, when I see something like this, is a significant that this block here, this block, the one that is there, this decision point, this supplier level, market is going to do what? Market is going to respect it. So for market to respect that level, check what happened. Check what happened. We get from that area, we buy, markets return again. This is what I'm explaining, guys. Who's waiting? This is what I'm explaining to you guys. You need to pay more attention. The key level is this candlestick. This last candlestick, this one here. If you go to daily time frame, then you see it properly. You can see we have even, let me just zoom. Let me zoom there so that you can see properly. Let me tell you. Do you see? This candlestick was the one that market returned.
No, I have a question.
Test there, then market drop. That is a supplier zone. Market touch the supplier zone, then drop. Check the reaction. If you go to low time from this one, you're gonna see. Okay, I'm sure I'm recording that. If I'm not, I'm recording. So you're gonna see what is happening from this area. Market return, test the level. We have the ident base, the one that is there. Market return with this week. Let me zoom. Sometimes the mitigation happen in front of us that you don't even pay attention to it. We have the ident base. After we break all this area, market return, check the ident base, then market continue to the downside. So at the same time, one cool things happen from this area to show you that this market is supposed to sell very hard. I show you on the beginning that you need to follow momentum also. Market took almost 23 days and 93 bars to come down. At the same time, market took, I don't know, maybe a year to come to this side. Market took almost 64 days and 279 bars. So for me already, this shows something that this compression plus the one we have here, market is gonna do what? Market is going to respect my supplier zone and market is going to drop. Now check this level, this zone here was a very significant level. Why was it a very significant level? Because this zone here, markets, it was, just say something, it was a resistance, it became a support from this area, become a support, market push again to the upside. You see, market push again to the upside. If we want, because if you can check from this SGB, first time I identified this SGB, then because of the madness, I think there was a news, this corona vaccine that day when they says the vaccine market was just made. You're gonna see how market push, didn't respect, first time to respect the level, drop small, then push again more to the upside because of this zone here. Let me just cut. So before I cut, wait, let me mark the zone there. So that we can go and see what happened there, why markets sell from that zone. Then we can start moving. Let's say maybe we go to M5, M15. You're gonna see on M15, we have this block that leads to this break of this low point. Let us go to M10 again. You see that block. This block was the one lead to a break of this low point. Markets return after 65 days to come and mitigate this zone here and drop. So crazy, guys. So if you don't see, let me show you. This is the block that they use to come down. We can even go again more to low time frame just to identify the exactly point where you're supposed to take the trades. You see, so it refused because there is no data after that. So that was what happened from the area there. Then what happened was when I missed the trade from that area, what I waited, I was waiting for market to return. Yes, market returned to my level. Let me do something like this. Yes, first time this is our market sell, compress. Sorry, this is the level, market sell. Now check what happened again, how these things were so cool. Check again how market compressed after this drop. You see how market was compressing. Then we have this equal highs from this level, market push with this impulsive movement. Then what happened? I missed the air trade from here. My trade that I took was here, it dropped down, then went again up because here I've already collected my profit, but I didn't jump again after it went to the upside. Then check the way I miss this stuff. This is what I miss that day. This is what I miss. It was like something, I don't know, plus 300 pips, if I'm not mistaken. Yeah, it was almost 500 pips. So I miss all this because my stop loss was so tired and I didn't like the way it was doing here. But the only thing that was there was market was distributing from this area. If we go to low time frame, let me show you guys. Let me show you. So if we go on this zone here, you're gonna see market was trying to do like a distribution from that area. So me, I was impatient. You see, I was impatient to wait for all this movement. Then, so I'm back on Wyckoff because yes, supply and demand is good, but without Wyckoff also is zero because market is gonna sell and markets, you're gonna rush to take the trades. You're gonna rush to take the trades, or what you're gonna do, you take the trades, market hit your stop loss because market is on the phase where market is start like doing the distribution, then you just rush your trades, then you are out at the end of the day, market goes in your direction with so many pips, then you start regretting why I didn't check the trade. And if you can check, I was so stubborn that day because after markets break this area, check market return, I could take another entry from here and come with it down, but I didn't consider that. These things happen again on, I think on gold, if I'm not mistaken. It happened on gold somewhere here. I remember you guys, you're gonna remember this analysis because this analysis I share with everyone in the group. Now check what happened. Why I'm saying I consider more my three touch, the one that I've already seen on gold. They're happening so many times on gold. So if you can check, we have this one. Let me go to, let's say maybe M30, M1, for us to see properly. Yeah, this is the one. You can check here. What is happening here? We have 1, 2, 3. Check what happened. Market drop. Put also in mind, sometimes markets can break the low without returning, then go to the downside. Maybe it's gonna return in the future. So you need also to keep in mind these things. And let me show you that these things on gold, they're happening like every single day. Like every single day. It's just that you need to keep and pay more attention. Here they happen. Market give us three touch, 1, 2, 3. In Wyckoff, we know already, we have buy climax, we have the uptrust, the one that is there. Then we have the uptrust after distribution. Then there was a test. If you check on M15, there was a test there. Then market drop. Market give a distribution on this area. Then market drop again. Now check here again. When gold was selling somewhere here. When gold was selling somewhere here. You see what happened? Market gets on that area. Get on the area, give us buy climax. We can consider it as a three touch, just to go straight if you don't know Wyckoff. First time, second time, third time, you take your entry there, then you hold. What is your target? Okay, let me do something like this. Okay, we have the zone that is there. Then let's go to M15. This is what happened. We have the buy climax, we have the test. This is like a sign of weakness. Market push the upside, give us the uptrust, then uptrust after distribution, then check what happened. This is the test that happened that day. This is the test. Market return to come and test this zone after this level. They test, what did they test? They test the ident base. The one that is here, then market come to the downside. So this was what happened that day. Sorry guys, 1 minute again. So this was what happened that day. Yo guys, I'm so angry, I need to eat. Okay, no problem, let us continue. Okay, so when markets drop, again from this area, we have the same scenario. They happen, market drop, return test the zone, create this level. We have a decision point on top, 2 decision points. Market gets on that level, check what happened. They drop, they give me what I wanted. Now they start pushing. Then market start pushing where to the upside. And this was another trade that I call in the group for people to take it because of this last candlestick. Market test the zone, then market push to the upside. So guys, I promise all of you that I'm gonna give you guys.
Brother, I have one question. Can I ask?
Yeah, ask, bro.
Yeah, it is from Wyckoff schematic. Okay. So you remember I was asking you that in reaccumulation, can you draw spring with crick and jack? Just just a figure.
Let me show you something because I did these things this morning and check the way market is flying. What do you see on this zone? Let me mark this zone for you. What do you see on this zone?
Reaccumulation.
This is what?
Spring.
So, and this one here is what?
Creek.
So simple, straightforward.
Yeah.
And if you can check here, what is here?
Accumulation schematic.
Yes, this is accumulation. This is reaccumulation with, how do you call? With a creek, the one that is happening. Because what I consider when I did this analysis was this one here, I call it a buy climax. Then down here, I consider it as a sell climax. Then this one was a test. This one was automatic rally. This one was how do you call? Test, secondary test. Then we push, we have the upthrust. Then markets start moving in a creek. Then we have the spring. This one here, I consider it as a test of this level. We have the last point of supplier. Then markets break this low point, sign of weak, sign of strength. Markets pull back inside. Then here we have the BU like a backup in action, last point of supplier. Then check the way market is flying. There was someone who
So
asked
how
me,
we draw Jack there? How we draw Jack there?
remember Jack? Jack is when market jump the creek.
So it is after we have LPS. No, I'm wrong.
No, I'm sure you're right because this is the creek. Market jump this level. Market jump the creek. This is why we have the jack. We can call maybe this one as a jack. Because jack is the one that jumped the creek. That is the meaning of the creek, of the jump. I don't know what I'm talking.
Okay.
Yeah, so jack is the meaning of when market jump the creek, that is jack. So it jumped the creek.
So it should need to retest that creek for confirmation.
Yeah, it depends. You know, market sometimes is crazy. If you get a retest, are you okay? Because this is a creek, market jump the creek, return and the retest, then they continue to the upside.
Oh, okay, got it. Thanks.
Yeah, so it just depends on how market is giving you. Sometimes you're gonna wait for that test, but then it's never gonna happen. Market just gonna continue to the upside. That is what is happening like every single day. Someone asked me for why boom and crash is not very hard. Let me show you something. I just have pending order like everywhere, so and I see how market is going to react. My brother, what is this crash? The crash is here. Someone was saying, why crash is so hard? Crash is hard for people that they are trading spikes and other stuff. If you don't do those shit, it's very nice for you. My brother, ask me now a question about crash that you say you're gonna ask me, so what I explain to you.
SPX to the moon.
How?
SPX to the moon after Tesla added in it.
Yeah, I saw it was flying up. Where is it? Yeah,
Tesla added. I think some other companies, big names will come. SPX.
X? Oh, sorry, XPS.
S
Yeah. Is here. Yeah.
Yeah, it is flying.
Okay, so on this one also, I'm waiting also my pending order there. Let's see if it's gonna happen. Then So nice, man. Yo, this thing is so easy, very easy. Just for you. Where can I start maybe so that you do understand them properly? I can even use H1. No, because you don't know what you are doing. If you know what you are doing, then you're not gonna have that story. And believe me, if you know what you're doing, you're not gonna have that story. Because most of the people that I'm teaching that they know these things, you see them, they don't trade crash like the way other people they're trading. They trade crash, they consider it as like anything that you know. Let's say example, this one. We have CCE, the one that is here. Market come, test, market push to the upside. Let me check that. Okay, the difference between, let me read again a question. Okay, the difference between, let me just go to this one here so that I can explain properly. The difference between SR flip, what is this one? Okay, SR flip is like this. Let me draw it again. This is SR flip. So you have your R that is there. Then markets come here. So this resistance changed to become a support. So here we have S, and here we have a break. So you can check this resistance, markets break the resistance, return, this resistance become a support, then market push to the upside. Then RS flip. RS flip is something like this. Market test the level, push to the upside, break, return, then continue. This one is the support, this one is the resistance, and this one is the break. This is what we call SR flip. Then what is the SDE? And SDE is something like this. We have demand level, like a base where market was going like this, 1, 2, 3, market push to the upside, create a base, then rally. I hope it's gonna make sense so that you understand it. Then market come on this zone here. To have the SR flip, sorry, the SDE, we need to have a rally. Then we need to have a base. Then we need again another rally. Then this zone here is our demand zone. Then from our demand zone, market is gonna come test the zone, push to the upside. When they break this area, when markets return, Then we need to have an SGB, the one that is going to be there, a significant base. Inside the SGB, we need to find what we call ADP. That is a decision point for us to go down with that market. So, question again. Structure, you're going to use it on all time frame, on anything that you want. I'm trying to show my brother here something. So he said I need to identify the decision point. We have the SDE. We have the SDE, the one that is there. If you can check example first time when market use this one, market use this block here to come to the downside. Sorry, before I go further, we'll have another view. Yeah, it's happened. It's happening in the market. You can identify the SGB. This is why you see some people, what they are doing. Let's say, which example can I give you right now? Try to understand what I'm talking about. Okay, let's say on this zone here, this is the zone. This is the significant base, the one that I have there. Inside this significant base, so if we have a significant base, let's say we have a significant base, this one, you're gonna see we have a DP inside a significant base. We have the hidden base here, and we have the DP type one, where we have the candlestick with this void movement, this imbalance movement. Then you're gonna see market get for the first time, touch that level, second time, test the level and drop. Now another story is here. When market is breaking this area, you're gonna see all this zone here is our significant base. That is our significant base. Now, inside the significant base, what do we have? We have this DP type one. Market return there, then drop. Market continue, grab all this higher level. Then if we go to low time frame, you're gonna see what market mitigate there. Anyway, we're gonna even do just like this. Market mitigate that inefficiency, the one that is there, then check the reaction, how market drop. It's so simple, guys. Markets make a new no, the thing is that you're not gonna supposed to sell. You're not gonna supposed to sell. How do you call? You're not gonna supposed to sell on this zone here. Sorry, because me most of the time when I see market build liquidity like this, I don't take my trade on this liquidity. What I'm gonna do is wait for market to fake out. This is why I explained to you guys this concept. I'm just from explaining to you guys. You see market build the level of liquidity. Then what do you wait? We wait for market to grab this liquidity on top. Then market to start doing what? Coming down with it. Check what happened. People that they rush to sell from this area, they hit their stop loss. But people with patience, because they know there is a decision point that is on top on that area. Because if you can check, we have this area here. We can even go maybe to any time frame where we find. You see, like a typical example from this area. Market build the level of liquidity. Market break the zone. We're gonna say here, market use the SR flip to drop. Market return, use the SR flip, then check the way they're going to the downside. You see that? So you need just to understand, because check how many times market sold from this zone. 1, 2, 3, like here, like 5. Then you come and sell from this level. Maybe you must be, I don't know what you want to think is the market. So like people that they're saying these things are not working. Bro, they are working. You just have to know. You just have to understand. Bro, let me tell you, the one that you call flippy, that is HLZ calling them a flippy. That is a level of liquidity. It just didn't want to tell people that is liquidity. Each and every person make the market and give it a name. Even myself, I can give that name my name, but that level is Getson. Who's gonna refuse? I'm the one who give it the name. According to my understanding, is get on. So each and every person give the market a name of what you want. There is people that they are calling candlestick ex-girlfriend. So HLZ is the one call it flippy, because why is calling a flippy is the one that I'm just explaining to you guys right now. These things here, where is it? For him, this zone here where market is changing, that is a flippy, because here we have a support. We have a support that become a resistance. So that is already a flippy zone. A flip is where market is changing direction. That is flippy. So people, they call flippy, don't understand why this guy is calling flippy. Market, when he return again here, is gonna say flippy. That is a flippy zone. So he's not gonna waste his time. He's not gonna waste his time of writing R1, R2, R3. It just call all this zone here as a flippy. And this is why sometimes you see me, I wrote R1 or R2, or just in short, I just wrote eco eyes. So this level is the level where we have the engineering liquidity. You see, flippy, fake out zone, all those stuff, they're the same scenario, nothing is different from it. So this is what I want to show you guys. Let me go to boom and the VIV crash. So for people that they're saying, I'm buying, then it's selling, it's crashing, you need just to know when you're buying. Check this one. After they grab this level here, they grab this level. Here they use what we call a hidden base, drop. Now they start buying. So simple logic, guys. If you don't understand whatever you're doing, then it's a big issue. A nice one. You see this area here, push. Now, if we go to low time frame, you understand that there was a break of structure on this area because this low higher, this one, give us this point. Then market break this structure from this level. Then market start pushing to the upside. Then market come down. You see, market push again to the upside. What is the last point? You see, this is the last level. Market failed to break this level here. Then markets continue going. A hidden base, make sure you use them after market break structure. Sorry, before market break structure. Same scenario what happened here. Just a typical example is the one that is here. Before market break structure, they give us this hidden base inside this void movement. Then, okay. You see, I was telling you guys there, if you check, first things that you need to know is we have inefficiency, the one that is there, and we have the hidden base. Let me mark this hidden base here. Now, when we mark something like this, so now we need to get what you call a precision to understand what is happening. Check inside that hidden base, the one that I mark. There was another inefficiency that was here. Market used that inefficiency to come down. Then at the same time, there is another hidden base, the one that is here. So let me mark again that one. Let me mark again that one. Then I can shift again, maybe let's say to M30, H1. You see what is there. You see the block that is there. I can even go again more down just for you to make you happy. You see the level that is there? I can even go again more down so that we can be satisfied. Do you see that zone, the way it is there? You see? So here we're gonna say market use inside our hidden base. We have this candlestick, the one that is there. That candlestick never been used. That is the one market used, touch, break the area, return, then continue again to the downside. So simple and straightforward. Even if you go to boom, what is that boom? What is the boom, boom, boom? Okay, V75, it's moved properly. Just understand the market structure, then you are done. There is nothing. Oh, sorry guys, yes, my friend. Guys, V75, the only thing that you need to understand is the way market structure is going. Do you see how V75 is creating a confusion? Let's say from here, we have this higher point, we have this low, then here market failed to give us a break of structure, then market give us a break of structure somewhere here, then market come down here, give a break of structure there, then market push to the upside. I won't consider this one as a break of structure. I'm gonna consider this one here. Then from this one, check what is happening. Let's say we go to H4, you see. So we waited for market to come and break this zone here. Market failed to break the zone. Now check what market use. You see what market use there. You see what market use there. So we can go down a bit. This is just H4. What we are going to consider is the ident. Is the ident base the one that was there? So from that ident base, then you're gonna see how market is doing what market is moving. But at the same time, check what is happening on this one. How market was going to the upside. How long it take market to go to reach on this area. It already shows us that market is going to do what? Market is going to sell because of this long pullback. No, it doesn't look easy. It's just that you need to understand what is happening and what you are doing. It's going to be very easy. I shared this analysis this morning about the accumulation that was happening here, the distribution. Before yesterday, I shared something from here. The one that was happening here, how market was coming to the downside, you know, those kind of stuff. So we need just to pay more attention. This was the first time back. I can take my trade here because it's the first time back. Then check the way market drop. Now check the way market is pushing to the upside. So it's something that is, no guys, it's very, 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 very easy to, I don't know, maybe. You're saying gates on your chart, you will know it is hard. Yeah, it's true, bro, it's true. But as long as you put more work, and why is this candlestick called ident base? It's called ident base. Okay, it's called ident base because the space between the two candlesticks. So on that space there between, there is orders that institution left. Okay, bro, you are saying I need to explain HRZ CCE. Yeah, I saw it. Oh my God, again. Oh, let me go. I saw it here. And good luck. I have everything that you're asking today. This one. No, you're gonna see them. Tony, you just need practice. When you need practice, believe me, you're gonna see them. There is nothing that is very hard in the market. It's just that we need to, you know, what do you call? Okay, this is the CCE. Let me just go and do something like this, yo. Guys, I'm tired, yo. Okay, guys, this is the CCE. So when we call the CCE, is this one, is the significant supplier in Gulf. So what is happening on this zone is something like this. To have the CCE, we need to have where markets give us a drop, markets, oh, what am I writing there? Where markets give us a drop, market give us a base, then market drop again. I'll explain Kevin. Kevin just what to explain. So let me just finish this one, then I'll do that. So when we have market create a base, then what you're gonna see is when market is gonna start coming inside that base, market is gonna start touching, and drop. So all this part here is gonna be our significant zone for us to look on how we need to take a trade when market is coming, anytime market is coming from this zone. But how do you take a trade from this zone? We need to see either a compression, like the way I explained, we need to see a 3D where we have first touch, second touch, and third touch. That is accumulation. And we need to see market create a level of liquidity, what we call a flippy or the fake out zone, so that we can take a trade from this zone. Then, first things we need to have is the one that I'm explaining to you. We have a supplier zone that is there. We have a base that is here as a supplier zone because we have drop, base, drop. Market get on this area, then fail to hold. Market break the zone. Then on this zone here again, my brother, can you mute yourself, please, so that you don't get noisy? So on this zone, what you're gonna see is market is failing to do what? To hold from the supplier, then market break. If you just pay attention, guys, it's just a normal like structure, man. We have I, this is I, markets get here, fail to break this higher low. Market start pushing to the upside, but before market push the upside, give you these things. Then market break what you call the higher high. Market print a new higher high. Then market start coming down. This is just a manipulation that you need to keep in mind. That is one we call CCE. Then markets come to the downside. When they come to the downside, then we need to look for a decision point inside here. Then we buy, we go if it the upside. So simple and straight. I hope you guys it's making sense. Now let me jump to the chart so you can see what I'm talking about here. Because I know without chart, guys, you're just gonna get lost. So this is a CCE. Market touch 1, 2, drop, then market push to the upside. At the same time, when market is pushing to the upside, I've already explained to you guys, like if you want again, just a review, 3D, 1, 2, 3, market sell. Here again, market give us 1, 2, market get to the upside. We know already we have a zone where there is interest where market has to return. But check the way market was doing. Market just build liquidity on top, down, they grab liquidity here, they push to the upside. Now check what happened at the end of the day, they return back inside where? Inside our zone. They return where? Inside our zone, the one that I mark on this area. They return there when they test the level. I call for this trade, there is like a month, if you guys remember. Then market gets inside our CCE, then market starts pushing to the upside. This is the flags limit. So market start pushing to the upside. Let me show you another example. It has to be, where did I see it? Let's see. There's no problem there. Yeah, just here. Hosanna, hallelujah. Okay, so guys, yeah, this is the baby SEC. We have this area. We have this zone here. We have this zone here. For your information, this is what happened. We break the zone. We return back down. You see, we return back down. Then guess what happened? We went up almost 500 pips, if I'm not mistaken, from this area to this zone. Yeah, 500 pips. Just by knowing this manipulation, you could make your simple 500 pips without even fighting with your broker. You know, this is the zone. And where do you take your target? Because this one mitigated a level which was on daily time frame. There was a decision point on daily time frame somewhere. Then market push again on the same scenario. So market come down, check the way it consolidates. Here we are the nice 3D, the one that was happening here, if I'm not mistaken, it was a 3D or a compression, something like that. Yeah, that is also one that is there. You see, bam, bam, then we go. We can even consider from the upside as a 3D with the momentum line. You see, yeah, 3D with the momentum line, markets return, then push to the upside again. So there was another one, I think I saw it was on, if I'm not mistaken, I think H1. Somewhere here. Yeah, I'm sure it was here, this one. This was H1. CCE, they buy, they push to the upside, they come down. Another one, I think it must be, I saw it again on Euro GPY. Let me see. Where is it again? I'm sure it was H1. Try to see if you see. If I'm gonna see the label. There we go. This is how you backtest. Don't just go and look where market is buying and selling. You don't even know what you are backtesting. You have like SEC, you know, okay, I'm going to look for it in the chart. How is the market react to it? We return, then we push more to the upside. From here, market went, I don't know how many pips, I'm sure maybe plus 500 somewhere there. Oh, this one went slow. No, almost 200 pips. Euro GPY, I remove it from my list because it's super slow. Doesn't even pay. You guys imagine all this movement, 200 pips. All this movement. Not even 200, yeah, 200 pips. Ah, what the hell? You know, it's how many days? Just to wait for this. 11 days. So I'm not happy if the way it's moving. It's moving super slow. It's moving super slow. Super slow. So any question, guys? Because I feel like we are done. Huh? I talk too much today. Okay, my brother, the one you asked about the Iden base. This is the Iden base. This is the Iden base. So the Iden base is this space between those two candlesticks. So check the way this candlestick, they close to each other. And then you're gonna see them like everywhere. So me, the way I consider them, like all the week up until here is my level where I will take the trade. I'll take the trade. But for people that they trade void like me, I'm gonna do something like this. You check that is a very significant level. You see, market return there, then continue again and again. So the Iden base, when you find the Iden base like this, then what you have to do, you can cut that zone there. Then you start moving to low time frame. Check here, we have only voids, like a crazy one. A crazy one. Another one is on top there. Check, we have another Iden base on M30. So we have H1 and M30 Iden base, M15 Iden base again. Already is a very confluence for me to take a trade from that zone. You see, so until we get the block that is there, then if you go here, then you find my block is there. This is what I was telling you. For me, when I see something like this, that is my zone. So sometimes I don't even need to go to the low time frame because I know already the concept. I know what is happening. I know what is inside there. I know there is a block. The fact is there is a block. There is orders. Check. This is what we call a base, a proper base that is there. And if you check again down, there is even another hidden base that is there on the low time frame. So it's something that is, it's proper for me to take a trade on that zone and kill the market. So this is what I always do, my guys. So we can check, market gets on my level, touch my level. Then what do we do? If I could take the entry there, 76 pips, pass slow these things. To make a 500 pips, I don't know how many days you need to wait here to make 500 pips. This is super slow. I'm never gonna look at it again. I even remove it from my level, from my stuff. The only one that I like is this one because this one can give you pips. You see, here we have something like that. Oh, something proper, not bad. But this one is the money. This one is the money. And the big money also is this side. Okay, another thing is this one. Let me check, guys, as our last one for us to see what is happening. Where is it? Where is it? Where is the... Okay, let me check something here. Yo, I'm even tired, guys. Tired. USD GPY. Kevin, you asked a question. What was the question again? Do you mean I didn't? Yeah, you are the one asking the question. I'm going to explain. You see this chart, the way it looks, very beautiful, guys. A nice chart. You see, guys, a proper one. I'm sure I'm going to send you this chart, guys, so that you can go and learn from this chart. It's just something that I'm going to send you. I'm not going to explain. I'm just going to send you. You see everything that is here. We have 3D. We have SDE. You know, so we have, so all the stuff that I just teach you, they are inside this trade. As you can check, we have 3D. We have liquidity, where they fake out, touch that area, come down. We have the CCE is here. For those one, they need CCE is here. We come then push to the upside, come again down, and come to the downside. So, guys, this was my gift for the new year. So this was my gift for the new year. I make sure I explain the full concept. I explain to you guys everything that you need to know about the market. And the fact is that I know after this is most of people, they remain without understanding, and other that the one that they're gonna try to see what I was explaining, they'll do what? They'll go and make practice out of it and grab all the knowledge of what I was explaining. So I need to see you guys improve. I need to see you guys doing better. I need to see you guys making money, you know. So as long as you're doing something that can provide for your life, that is good. I don't care about anyone money. This is why you see myself, I don't force anyone to join me. Then what I normally do for people that they know about the group, this is what I always do. It's just that this recently, I stopped doing the Zoom session, but I'm gonna make sure 2020, 21, we need to have at least one Zoom a week or 3 Zoom a month, where we review all the stuff, we review all the things, because other people, they can refresh their minds and to get the concept properly. Because as long as someone is getting whatever we are doing, then they apply them and work with them properly, then it's gonna be very, very, very nice. So guys, I know people, they've been asking me, we need a giveaway. This is a giveaway. Go learn, practice, and make money. If I give you $20, $40, it won't help you. But I just give you knowledge for you also to go and apply it and to make money. So if you don't apply this knowledge, then is your problem. Then is your big, 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 big problem. So guys, I'm so happy for everyone who's here. Then I don't even understand why these things didn't cut off. Because I know normally it's 30 minutes, but we are now talking like 3 hours, 4 hours. So I don't know what is happening, guys. So I'm just happy for all of you guys. And this is why I wanted this meeting to happen right now, so that we can like do all this stuff together and understand each other. So I'm so proud of you guys, because I know it's not everyone who attend this meeting, but you guys show that you need to understand something, and this is why you're here. So already, I just say Merry Christmas to all of you guys, and enjoy, be safe. Don't let yourself be attracted by COVID. So we wanna see you guys in 2021. So we continue with the big fight, fighting for poverty. We need to save our family and do better stuff for them. So guys, enjoy.